Good morning and welcome to today's edition of the London Session Open. Today is October 3rd, 2019 and it's 7:22 a.m. in London when we're doing this market update. I'm doing these market updates as recordings now in the morning so I can do the webinars for you guys at a good time so you can guys get ready, but of course so I also can publish content on investingcube.com. If you're used to watch this video on investingcube.com, then we are having a bit of issues on the page, the YouTube channel that is. We have so many people checking out the pages that we're exceeding the viewing quota per day. So that's why it's actually not really working, because there's so many people on the website. Hopefully we're gonna get that sorted, and we'll have that up and running before the end of the week. The best way really to stay on top, so you're not dependent on the site, is to subscribe to the ATFX YouTube channel, ATFX UK, and that gives you a notification of any of these videos. And of course you can follow me on Twitter at AlexFX00. I also have a WhatsApp feed if you're interested in that, and we have the we have a Telegram feed as well for InvestingCube, but I don't always send out a video via that channel. All right, so let's talk markets. So yesterday I put out a video and talked about maybe the euro dollar bottoming out from a multi I think it's a multi-day, multi-week low, and it looks encouraging. I mean, the market moved to the upside. Let me explain to you first how I figured that out, and that the euro could potentially bounce. So I'm using pitchforks, and this line I used it many times, not many times, but I used it a few times, I would say. Helped us to suggest that we're gonna sell to the downside, and then as you can see it suggests that we should bounce from these levels. And I actually bought some euros, but not against the dollar. Instead I bought Euro CAD, and I managed to get that perfectly right with the market. I literally bought here at 44.70-ish, and then closed out at 45.75, which is pretty much here. I managed to get that really good, because what I have sort of, what I've been talking about in the webinars, but also in the articles, is that I think the dollar is just a bit too strong, and the euro CAD, as you've probably seen it yourself with your own eyes, is just trading sideways, right? So buying CAD, buying dollars, it's the same thing, or shorting CAD, shorting dollars, pretty much the same thing. I did, however, like the euro CAD better, because the Canadian dollar is doing quite good against many different things. Now this is the dollar index, right? So you have yourself the dollar index, and the dollar index usually is rejected out on this blue line. This is not as a clean channel like we have for the euro USD, but this is good enough. And a few days ago, as you know, we moved upwards, but then 2 days ago here on October 1st, you had, I think it was October 1st, my memory's so bad already, let me see here, yeah, probably October 1st or Monday, yeah, October 1st I think it was. You had the very bad non-farm payrolls, right? And that you could see that on the 1 hour here, how the market, and then not non-farm payrolls, sorry, ISM, you can see how the market just declined like that. When something goes all the way up like this, at 7 o'clock in the morning, all the way up, and then by the end of the day it's pretty much back at the same level, it's a warning sign. Surely the market moved up again, and then the market slid, and then now it's trading below the September 30th low, which is this level here, and that means that we just stopped creating higher and higher lows. So the short-term trend in the USD is now probably, well, it has technically turned bearish, and usually when the market is forced back into the below the blue line, it will target the median line. See here, like that, here, like that. In this case, we're not to the median line. Sometimes the market goes all the way down. And you know, this has to do, again, also with the economic outlook. Now, I think in the long run, the dollar will gain. I do think the euro will trade lower. And if you download our Q4 outlook, which you can download on investingcube.com. If you go to investingcube.com, on the very top to the right, you'll find it. If you are in the mobile version, you just need to click on the menu and then look for quarterly market outlook. Now that tells me that the dollar will probably continue to gain, and it's quite clear it is gaining here, because the dollar, even though they're cutting interest rates and everybody else is cutting interest rates and everybody's economies are just going cooling, the US still has higher interest rates than many other countries. So that's why, and that's what money flows to their country. So I reckon that the dollar will continue to gain, but at least from a pitchfork perspective, buying up here is not a very good option, and that's something as well I put on investingcube.com. What you can do, the easiest way to keep track of what I'm up to, you click on authors here, about, and then authors, and then you click on my name. And you can see that yesterday I talked about the US dollar, published that one. And I think as well I talked about the indicator here in the dollar index yesterday. Here's to download the quarterly report. Alright, so what does this all mean then? Well, I think tactically the best thing, if you wanted to keep a longer position, at least in the dollar index, would have shorted here at 99.34, something like that. Stops above. Alternatively, now when this market is bearish, one could have shorted here or stop on the other side. As for the euro moved upwards, and I think the best thing to do now is to probably, I mean, the trend pretty much remains bearish. It does remain bearish here. We have created a bit of an inverse head and shoulders with head, left, right shoulder. I think we can push down the trend of funding level a tiny bit. I think for today, this market is probably gonna go down to the September 2019 low, or the September low here from September 3rd. Then we can go down, but then we'll see what happens. The alternative is we break above here and we go up. It is, unfortunately though, a bit of a messy technical outlook here. Unfortunately it is, because we would be buying against a downtrend, and you know, there's, when we go higher here at 111, I think a lot of people would be very, very happy to sell. According to the pitchfork, the median line is at 110.30, so shorting at 110.30 with stop losses maybe at 111.14, something like that. That the pitchfork would actually approve that. So I think we can go up a bit to maybe 110.23 or so, but then that's going to be it. In the very short term, in the next few hours, I think we go down to 103, 109.37 or so, and then we'll see what happens. But I think it is trying to bottom out. GBP versus the USD. This market continues to be under pressure. PM Johnson yesterday introduced some new proposal to the EU, and the idea is, well, I'm not gonna cover all the details, but in essence, Northern Ireland is gonna be much more aligned with the Republic of Ireland and the rest of Ireland, and they're gonna have, the Northern Ireland is gonna have the right to vote every fourth year if they want to remain part of that close alignment with the rest of Ireland or not. And there's gonna be more aligned. The idea is that you need to do less checks. In fact, I think they're supposed to be aligned on all goods. So that's what's being discussed, and the EU is looking into that. going forward here, this might be actually something that could give the UK the opportunity to leave. We didn't, I think comments were like lukewarm, I think, from the EU. I'm not, unfortunately, an expert in all this politics. Um, but yeah, we might get something. I'm not 100% sure though. Wouldn't be able to tell you. But I can tell you about the technicals. And the technicals, as you see, the market is trying to bottom out. And what happened here, which is actually a bit unfortunate, when the market goes down like this and then it doesn't allow to push up and then down, that's an issue, because what's happening is now people are selling, they're selling, they're selling, they're selling, they're selling, they're selling, and then eventually the mood of the sellers changes, and everybody got very short. So then when the market starts to go upwards, they need to offload their short positions, and that causes what we call a short squeeze. And I think that is what may happen here. So I'm gonna be a bit more defensive. I'm gonna push up this, and I'm gonna put this at the third fib. I know we might not reach that, but it looks to me that something is building. Because if this doesn't trade up soon, everybody's gonna be short. You're gonna have a bit of a short squeeze. We'll take out these highs, and everybody that's shorted from September 26th is gonna be under pressure, and they're gonna push price up like that. In the long run, I still think we're gonna go lower. That level here is the 123.86 level. Dollar yen is finally starting to look good. I did a little update on yen pairs yesterday as well. Euro yen and dollar yen. Japanese yen poised to gain on more stock market turmoil. I think here that the market looks finally to have peaked here. You guys have a nice little rectangle pattern. This is either gonna go a little bit to the sideways and then down, alternatively go up and most likely down. Aussie dollar versus the USD, we're not gonna cover, but we can cover this, which is US oil. So US oil is doing the opposite here. Is it's from being very extremely overbought, it's now starting to go extremely oversold. So we had this trend line, and my idea here was for this to bounce. I did, however, warn that it was going to be very difficult, and one of the levels I said, look at 54.85. If we take that out, we would have stopped creating these lower and lower highs, and when we stop creating lower and lower highs, we're not in a downtrend anymore, and that will be the indication we bottomed out. This is a very good system. It's called multiple time frame analysis, when you have the big picture and then you have the short term. So you see the short term was not aligned with the big picture, which was upwards. And when these two align themselves, that is when it's time to trade. That's a very good system if you're not very, very confident to what's going to happen. In the case of the Euro CAD and Euro dollar, and CAD pairs in general, I was very confident that the Canadian dollar would lose yesterday. That's why I decided to buy on an extreme level, like I did. But here, as I was telling you guys yesterday, I didn't really know. I just knew that that was an interesting spot. Now, I think let's not get carried away. I think this is gonna return back to the fall. I think it's gonna go back up to 54 at one point. Obviously, with stock markets being very, very bearish, everybody's sort of selling, and we may trade lower. But again, I think it's just having a bit of a deviation, and then we'll probably move back to the middle again. And the biggest issue here is that we don't have a proper pattern. We just have this big triangle, and trading triangles in general is difficult. Gold prices. So this is gold prices. So gold prices, unfortunately, I got this wrong. So my idea was that we had a head and shoulders, we take out the low, and we go down. And if we go up, people go, it goes down again. But we remain bearish. Fortunately, the market moved up against that high, and that has to do with stock markets, which I got really, really right. So here would have lost 1 unit of risk. Okay, this is 1 unit of risk. We're looking at a risk reward ratio of 3.84, but as you can see here, that did not work out. So what can we say about the future here then? Well, I want to wait. There's nothing wrong with waiting, especially when you get it wrong. Trying to jump into a market after you get it wrong like this, it's probably better to wait. Now, according to the classic definition of a head and shoulders, the right shoulder is the important thing. And if we look at that today, you're still dealing with a bit of a downtrend. So I'm gonna give this some time. I reckon it can go up a bit more, but then probably down, and then we're probably gonna be around these levels over the next few days. Now here's something I got crazy right. Okay, so the idea was to sell up here for it to go down here, but not only that, and continue to trade lower. The different strategies: you hit your target, you book off, or you hit target and you book 30-75%, then you keep the rest if you wanted to, unless you're very convinced that the market's gonna tumble much lower. So here the idea has been to sell here for this to go down. We're pretty much down here. In fact, we extended below 28,000 to 2886.8, which was support. What's happening here is that we are in this market in a major triangle, but the data coming out has just been bad. The EDP numbers were not really good either, so things are not looking too good. And I love it. On the way down here, all these people that were like gloom and doom, like we're gonna, the world is gonna dissolve, whatnot. In fact, they've been bearish for so many years. I mean, they were bearish forever. There's people and certain websites that've been bearish. They were bearish, of course. They were bearish before the event, but when you rock bottom here, they still said, "Oh yeah, the world is gonna collapse. Yeah, the world is gonna collapse. 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 The world is gonna collapse." They always say that. I follow some of these guys on Twitter. Well, it's really funny though. It's like, they talk so much about the inverted yield curves and everything, but when we're up here, when the risk reward ratio starts to favor being short, they all say, not all, and they say, "Oh, I might have assessed the market wrong. What if the PMI indeed is gonna trade much higher?" That's a very good sign that it's time to have a bit of a contrarian view, especially because because of the technicals agrees with that. We're not here at the lows here. Now, if you look at the tweets of the same person, they're like, "I told you so." Yeah, but you didn't. I mean, you told the same story for many years, but trading wise, holds up here, right? You turn bullish here. That's why it's just many times just using technical analysis, looking at one market and then look at a bunch of other markets that are correlated. You can get a pretty good picture without doing too much on Twitter. Now, I haven't checked the mood of these bears today, and I want to see how that is. I haven't been too much on Twitter myself. I think here, triangle wise, support and resistance wise, that we'll probably have a bit more to go. So I think we can probably go up, but if you short it up here, you got it right. I think probably a very good idea to book again 50, if not 75%. And then if we go up, I think initially people will sell, but give this a few more days. I think there's a risk we can have very strong. If it goes up really strongly like this, then yes, we can probably sell, and it will test the bottom again. I think we have in general a bit more to go eventually though. Maybe 28.55 or something like that. For something here. German DAX. So took out the support level and is now finally at that September 3rd low that I wanted the market to reach on the break here. Fortunately, they went up before heading lower. Going forward, it doesn't look too much different to many of the other markets. We're trading within a red triangle, and we'll see what happens. But I think if it goes up to 12,149, this little area here, I think people will probably look to sell again, and then they're gonna target the lows, and then we'll see what happens at the lows. If the same bears tell us that it's time to buy here, then maybe it's time to actually look and anticipate a break. However, if the bears are telling us that the world is going to collapse when we're down here, and a lot of them say the same, then it could be an indication really that uh, maybe we're going to bounce. Okay, this wraps up today's market update. I hope you enjoyed it. If you have any questions, just leave them in the chat box. And you can also, if you want to reach out to me directly, it's AlexFX00 at on Twitter. Have a great day, guys, and I'll see you guys tomorrow. Thank you.